There's Lululemon stock. It was up about 1% today, but in pre-market trading, it jumped more than 5%. The company improved its fourth quarter sales and profit forecasts. Wasn't much of an impact, though, on the stock. You can see the shares are down in the past year, but they have bounced since August. Let's get more from Zachary Warring, VP of Equity Research at CFRA. Zachary, thanks very much indeed for joining us.
Yeah, thanks for having me.
I glanced at the revision from Lululemon. Didn't look like a huge one, but the sales forecast, for example, going in the right direction.
Yeah, I mean, I think overall this is good news, but I think the reason you didn't see much movement today in the stock is basically because, I think investors are looking forward. This is a marginal improvement on the full year. I think investors are really looking for what's going to happen in 2025. The analysts across the street have about $15.25 as the full year EPS estimate. We're a little bit higher than that. We think they'll probably do better. They typically are a company that beats and raises, and they think they're going to work through this inventory issue that they've had over the last few quarters by the spring. So. We think overall this is good news, but it was kind of as expected. Like you said, it's marginal, a little bit of margin beat, a little bit of revenue beat. So, and you're talking 20 cents for the fourth quarter in terms of above their previous guidance range. So overall good news, but, nothing investors weren't, I think, already prepared for.
You have a hold on the stock. You think it's too early to be buying Lulu?
I think valuation's fair here. There were a couple of years there where Lululemon's valuation, traded at 40, 50 times forward earnings. But that was when they were growing 30+% revenue and earnings a year. And I just don't think, growth is going to be that easy for the company. I think, they'll still see some growth in the U.S. and North America, but overall, you're going to look outside of that area. You're looking internationally, and especially China, over the next few years to lead growth. And I just think the multiple is probably deserving of a 25 to 30 multiple, which is about where it trades now. And you could see some upside if they kind of, see some reaccelerating growth. They've continued to grow over the last few years. They've not had a down year. Even COVID, they were, revenues and earnings beat. So, we think right now valuation's fair until you kind of see maybe a little bit more clarity on forward guidance, and then what's going to happen in China moving forward in terms of stimulus and some of that over there. But yeah, right now I think hold. We don't think shares will do much until their Q4 earnings call.
You mentioned inventory. So are they stuck with a bunch of merchandise they might have to discount?
I think they've worked through most of their inventory rut. They said that it would take until Q1, so you're getting to almost to that point now to kind of, finally work through all of that. Now I think analysts, how investors are, they look forward. They want to know what's going to happen in the future. And I think you're to an inflection point now, but it will be interesting to hear what they say on their Q1 call and, what they guide for. I think right now investors and analysts, their expectations are pretty low. I think $15.25 a share is very conservative. I think they could easily do 16 next year. And I think a lot of that they could do with, capital returns. They have an incredible balance sheet and no debt. And they have a lot of cash, so they can buy back shares.
The company does, I think you touched on this, the company seems to have great momentum in China. And is that enough to keep investors satisfied, even if growth is slow in North America, for example?
I think so. And I think they have a lot of other areas that they can go into as well. They started in China, but I think they have a lot of room to run in Europe. They have a very small presence there. They're doing everything right as a company. They get most of their sales direct to consumer, I think 90% plus. They get a big portion of their sales through digital channels, almost 50% there as well. So in terms of a company and how they're operating, they're doing everything right. I do think, China's going to lead growth, but they do have other avenues. I think, they could move into South America and Europe and eventually Africa. But it'll be interesting to see. I think over the next 2 or 3 years, China is going to be their main driver.
Has Lulu still got maybe we'll put up a 10-year chart. I mean, for a while, they almost had cult status among their core customers, and they did very well working with the local yoga community. Their same-store sales were eye-popping quarter after quarter. But is some of that magic gone for the company now?
I think it is in the U.S. In North America, but I do think they've had success, and they stated this in their Q3 earnings call, with some of those same kind of events in China and Asia, where they've had, some of those hour or 2 hour long events where people can come and work out in their retail stores and at their retail locations. And they said that they had a lot of success doing that. So it'll be interesting. I do think North America, you're starting to see a little more competitions from some of these brands that are popping up on, Instagram and TikTok, some of these smaller stores. But I do think that they still have a strong cult following. People love their product, and they put out a really high quality product. So I don't think you're going to lose that anytime soon.
I think you said they have repurchased their Mexican operations, and I guess a country like Mexico, relatively fast-growing population, and a country that's on the up and up. It's an economic power already.
Yeah, and I think that was some of the, you saw the stock react in their last earnings call, and I think that had a lot to do with it as well. So yeah, I mean, I think there's plenty of areas for them to kind of penetrate other countries geographically. And so, and they're still working on their men's product, and I think they put out a pretty good product. So, they have a lot of areas that they can move into and grow. So I don't, a company that I worry about is Nike. It's hard for me to see a lot of growth out of Nike, but a company like Lulu should have no issue over the next 5 to 10 years continuing to grow.
Thank you very much indeed, Zachary. Great hearing from you.